Alright guys, today we're going to be going over the 3 ways to trade. We're also going to look at what prop firms or funded accounts are, and then I'll show you guys some of our favorite prop firms. So before I start, I want to note that these apply to everything: futures, forex, crypto, etc. So no matter what you're trading, these are the 3 methods to trade. So the first method is a simulation account or a paper trading account. So these are usually for beginners who are still learning. There's no risk involved. So you're not playing with real money, you're essentially just practicing. And this can be done on most major charting sites and brokerage. It can be done on TradingView, which is the major charting site we like to use. So trading simulations can help to develop personal strategies, models, and systems. You just want to make sure you're studying, taking notes, and looking at all your data. And one thing we like to use the back test, which is essentially reversing time or going back in time to trade live. And for that, we like to use FX replay. So yeah, this is for beginners who are learning ICT, SMC, whatever you're learning. It can also be for people who are just taking a break and trying to learn more and practice and develop their strategies. But after you graduate from this, we're going to recommend you go on to prop firms or funded accounts. So what do prop firms or funded accounts offer? So they offer lower risk, and we'll get to that in a second. They're mostly for day traders. So if you want to swing or invest in long-term stuff, this is not really for you. They do take skill, so that's why it's important to simulation trade or paper trade first. And they usually give you free data, free live data on NQ, TradingView, all that, and other perks such as a trading dashboard that you can track your stats and whatnot. So a lot of new people think these are a scam, and I'm going to explain exactly why they're not a scam. So prop firms are offering you a low-risk chance at success, and most people fail them, but the good traders don't. We'll come back to all this in a second after we go over the steps they use, and it'll make a lot more sense. So the first thing that's going to happen is you're going to buy an evaluation phase. So evaluations are simulated accounts. What you have to do is reach a certain amount of profit, and you have to stay in the set rules that the company or prop firm has in place. Usually it works like this. You pay a very low upfront cost to get the valuation. Let's say it's $50 to $100. So it's not much risk to you, as opposed to using your actual money and maybe losing all of it, which we'll get into later. But yeah, you pay maybe $50 to $100, maybe a bit more. The prices can vary. And if you fail, you don't get that money back. You're giving it to the company. And if you pass, you're moving on to the funded account, which is the next step. So after you pass, and let's say you paid $50, you're going to need to activate your funded account. You won't always have to activate it. Sometimes you pay more upfront. Let's say you paid $200 upfront, not to have it activated, or not to have to pay to activate it. But this obviously means you risk more money upfront. So some people like to buy the evaluation for less money, and then once they know they're getting to a funded account, they pay more money. So let's stick with that example. You pay $50 for the valuation, stay in all the rules, you reach the profit target. Let's say the profit target was $3,000. So you made $3,000 on a 50K account without losing, let's say, $2,000. There'll be other rules in place, maybe like you can't trade heavy news, something like that. So yeah, you pass your evaluation, the $50 evaluation, and let's say you activate your funded account for $100. So you're at $150 right now. So the funded account will basically be the same as the evaluation, except this time you can actually take the money out once you get to a certain point. So it's still a simulated account. It's not real money. If they were giving you real money at this point, they would be risking a lot as a company. So you still have to stay in the set rules. And the main rules in all these evaluations and the funded stages is you can't lose a certain amount. Usually for a 50K account, it's around $2,000. And there's also payout rules, but you can take payouts. A lot of companies do it weekly. There's different frequencies, but there will be payout rules, such as maybe you have to make 200 a day. You have to make a certain amount each day. You have to trade a certain amount of days. And all these rules will depend on the firm, but this is just the basic structure. So after you reach a set amount, you can take a payout. And a lot of times these payouts will be at a split, but the split will be favored towards you. And a lot of times it will be a 90-10 split. So you get 90% of the money, and then the firm or the company gets 10%. This doesn't always happen, but some companies will see you doing good, and they'll give you live money. So they'll basically just switch your sim account over to real money. But at this point, you're doing really well with them, and you've taken loads of payouts. So let's get back to this. The reason why it's not a scam is because of this. They're offering you a low-risk chance at success. So say $50 for the evaluation, and all you have to do is pass it for the chance to make thousands in payouts. And all you have to do is be a good trader. But as we know in trading, most people fail to win, but the good traders aren't failing. So because so many fail, these prop firms, these companies are making a lot of money from people paying for the evaluations and the fees. So they're making all the money from the fees. Like I said, most people fail. So with all this money, they're able to pay out the traders that don't fail. And they still have extra money to keep going as a company. Obviously, no company does anything for free, but it's a win-win for good traders and the company. We've seen companies make their rules too easy and they go out of business, but we only recommend the best companies. We've also seen companies that are too hard and no one wants to buy them, so they don't have enough money to pay out their traders. So yeah, essentially, people pay the fees. It's kind of like when you play one of those games at a fair where you have to hit the target or something and you get a prize. People are paying for that chance. You already know how to do this. You already know how to hit the target. You've been training at that, then this is good for you. You're just risking less. That's the main factor here. Say you're paying $200 total for a funded account. You'll likely be taking out your first payment of $1,000 to $2,000. So you're paying $200. Your return on interest is $1,000, $2,000. That's a great deal in my opinion. Instead of putting in, risking it yourself, potentially losing $2,000 to make $2,000, you're only risking $200. That's nothing if you're good enough to get to the funded stage, past the evaluation. You're risking $200 to make that $2,000. So your risk is drastically less. And if you're consistent, you're disciplined, your system that you practiced is good, then you can keep taking payouts. you don't risk anything else. Once you get the funded account, there's no more payments, there's no more monthly payments, there's no more activations. You only paid 200 and you have the potential to make an easy payout of 1,000 all the way up to, let's say you take 2,000 every week and you just keep this account for 5 months, 6 months. So at the end of this video, we'll go over a couple prop firms that you can use. And then the last method is, obviously, everyone knows this, real money or live funds. So if you think you're good enough, you don't want to deal with prop firms, you don't want to take the time to pick out prop firms, deal with them, all their rules, then you can simply deposit into your brokerage of choice. Many of these brokerages interface directly with TradingView, such as Interactive Brokers and Webull. So obviously this is full risk. You know, if you're putting $10,000 in, that's all your money. You can risk all of it. If you lose the 10,000, you're losing the full 10,000. And the potential for profit is the same as funded accounts. There's just more risk when you're using your own funds. You don't have to deal with any rules, any companies. It's all your money. It's all in your care. And also, this is needed for swing trades or long-term holdings. You know, if you want to do stocks, options, hold things for weeks, months. And then, yeah, obviously you can withdraw to your bank. You can keep the money in your account. It's up to you how you deal with it. This is your account. It doesn't belong to any prop firm. There is one thing I forgot to mention for prop firms, which is very good, and the other main reason people use it, which is leverage. So basically, if you're using your own capital, your own money, and you want to put in $50,000, that's a lot, right? $50,000 is a lot of money, but sometimes you need more leverage to make money. 1% of $50,000 is a lot more than 1% of $5,000. Nobody really wants to trade with low amounts of money because it's harder to make substantial profits, which you should be at least making 200 a day, 300 a day, something like that. So it's a lot harder with less money. So if you want to fund your own account, you're going to need a lot of money, and this is where prop firms come in. So they're very good for leverage. So the example I gave, paying $50 for an evaluation, let's say that's a 50K account. Like I said, these are simulation accounts, so it's not actually $50,000. But the thing is that it has leverage like it's $50,000. So you can trade with more contracts, which means you'll be making more money per trade. That's why some people like to buy higher sized accounts. Usually the accounts go something like 25, 50K, 100K, maybe 150, 200. These are common examples of account sizes, the most common being 50. The higher the leverage is, the more it's going to cost. So the more the upfront risk will be. Say this is $50 for an evaluation. Maybe this will be 100 and 150 activation instead of 100. Or maybe this is 200 altogether for evaluation and you won't have to pay to activate it. Maybe this is 400. So it's a bit more risk, but you're risking more, so you'll have the ability to trade with more power, basically. So yeah, the process we recommend is this, into this, into this. And what we truly recommend is this for day trading. So prop firms, they will lower your risk substantially for day trading. And you take all this and then you put it into your live funds and you hold swings or stocks. This is just the best way we found to make the most money. So say you have a bunch of prop firm accounts, they're all funded. Maybe you're copy trading them, which is another benefit. You can take the same trade on multiple accounts. So again, you're making more money, more leverage. Because say you have 550Ks, 500Ks. Obviously you're multiplying your money. But then obviously, like I said, your risk goes up, you pay more for the accounts, but we're trying to keep it simple. So you're taking money from your funded accounts. Let's say you're getting $5,000 a week and you're taking all this money, you're putting it into your bank, then you're putting it into your brokerage, your live account, in order to keep it in stock so it's not just sitting there. And the stocks are less risk, so you won't be risking all your hard-earned money. All your hard-earned money will be made here, and then it will be put here, and this will be easy money. And the more money you make here, the more money this is going to make, and the easier this whole process will get. So now let's look at some prop firms. So this is everyone's favorite prop firm because it's been around the longest and it's the cheapest. It's just everyone's go-to in the industry. As you can see, all this compensation paid out to people, so they pay people a lot of money. They're empowering traders, like we said, giving them leverage, lower risk. Here's a bit of their perks, rules. So 100% of the first $25,000 per account, 90% beyond that. 2 payouts per month, one-step evaluations, real-time data included. You can have up to 20 accounts, so all these things. Different benefits, minimum trading days, only need 7 days to get to your funded account. So you can trade the whole market, overnight sessions, 23 hours a day. Trade during news, one simple step. Hit your profit, you pass the evaluation, like we explained. Here's some of their plans. So, like I said, TradeAvate's popular because it interfaces with TradingView. So it's showing you the profit goal, how much you need to make. Trailing threshold, you can't lose this. So let's say you start at 100K, and then you've gotten up to 102K. That means you cannot get below 99K. So you can't lose 3,000, have to make 6,000. You're paying 207, but like I said, everyone loves Apex because they're always discounted, usually 80 to 90% off. So maybe it'll be like $50. And yes, for them, if you don't pass in a month, they rebill you. If you do pass, you pay the activation. which is like $200. So you're paying like $250 for this if you pass, and then usual payout for this is like at least $2,000 to $3,000. And then imagine you have a bunch of these and you're stacking them, getting those payouts. I think I mentioned this is for futures. I may not have, but if you're looking to get your first account with very low risk, these people are always doing 90% off. Right now, they're not 90% off, but with 90% off, it can be as low as like $20, $30. So it's super low risk for your first opportunity. And yeah, the first thing I would recommend is Apex Trader funding. So the next one I would recommend is My Funded Futures, and these guys are just really good. It's really easy to get paid. They're very simple, and they have a lot of variety in the types of plans you can get. So let's go over this example of 50K. So we pay $80. Just like Apex, if you don't pass in a month, they're going to rebill you. But upfront payment, $80. General rules, max position, 3 contracts. Can't lose more than 2.5K. Drawdown mode is end of day. So whatever account balance you have at the end of the day, can't lose more than below 2.5K of that. So evaluation, targets 3K. Daily drawdown, can't lose more than 1.2K. And then once you're at your funded, these are your funded rules. And so consistency rules, scaling. And then your payout rules, so you have to trade a minimum of 5 days. You have to get $100 each of those days, and the minimum you can take out is $250. So this is only $80 for very simple rules. Just make 3K, and then once you're funded, you only have to make $100 every day. That's really nothing. So even if you wanted to take out the minimum and just end your account, because when you take out money, it's the same as a losing trade. It brings you closer to the max you can lose. Even if you want to take out money, end your account, you'll still be making more than you paid. And now let's go to the milestone, which is the plan they have right now. You basically make money after each target you hit. They pay you money. It's a one-time fee. And then they're expert, which is the other main popular one, $165 a month. So this is what you're paying up front. Gotta pass it before a month goes by. So the rules are basically just better. More contracts, more room to lose money, no activation fee. Profit target, 4K valuation. They don't have any of these rules. And then as you can see on the funded, there's none of these rules as well. And the payouts is time-based on this, so it's not making a certain amount of money each day. You wait 14 days, and then the minimum you can take out is 1K. So you're still making more than you paid. I like this firm a lot. This is a very good, solid firm. And now here's one for Forex, which is called Aqua Funded. We work for them. As you can see, they've paid out all this money. It's not fake for any of these companies. You start to take a challenge, prove your skill, like we talked about, unlock the money, and then you get paid and have a profit split. Everyone has different variations. Obviously, the more steps, the harder it is, and the cheaper it's going to be. So 301 here. If it was only one step, see it's more money. Similar to the other firms, you have your profit targets, the most you can lose, the leverage you have, and then how you get paid, all their payout rules, how they split the payments. So on all these firms, your payouts are pretty much guaranteed, or we wouldn't recommend any bad firms. They're all reputable. 100% fee refund. This is something Forex prop firms tend to do. So they'll refund you what you paid if you pass. You pay $301 for this account. If you pass, they're going to refund you this money. And they have up to a 95% profit split. So yeah, this is how it's done, guys. These are not scams. Like we discussed, you're paying them money and fees. They're using that money to pay traders out, and also from their profit splits. So fees and profit splits. Give these companies their money, they pay you. They're okay with paying you. Say they're making $1 million a month in profit, net profit, and you come out requesting even 20K, which is huge for a month. They're fine with paying you that. It's not a scam, just be good. Take our education and be good at what you do, and you'll succeed with low risk. Wish you guys luck. Thank you for watching. Goodbye.
Yeah, hello.